In the world of auditing, understanding audit evidence, sampling, and internal control evaluation is crucial for any CA aspirant or commerce student. Let's dive into these concepts and see how they connect. First, let's talk about audit evidence. Think of it as the building blocks of an audit. Just like a detective gathers clues to solve a mystery, auditors collect evidence to form an opinion on financial statements. This evidence can come in various forms: documents, records, or even direct observations. The key here is that the evidence must be sufficient and appropriate. Sufficiency refers to the quantity of evidence, while appropriateness relates to its quality. Strong evidence leads to reliable conclusions. Now let's move on to sampling. Imagine you're tasting a dish to judge its flavor. You don't need to eat the entire meal. A small sample can give you a good idea of what to expect. In auditing, we often use sampling to draw conclusions about a larger population. This is especially useful when dealing with vast amounts of data. There are two main types of sampling: statistical and non-statistical. Statistical sampling uses mathematical techniques to determine sample size and evaluate results, while non-statistical sampling relies on the auditor's judgment. Both methods have their place, but understanding when to use each is vital. Next, we have internal control evaluation. Picture a security system protecting a valuable asset. Internal controls are processes put in place by an organization to ensure the integrity of financial reporting and compliance with laws. Evaluating these controls helps auditors assess the risk of material misstatement in financial statements. A strong internal control system can significantly reduce the amount of audit evidence needed because it provides assurance that the financial statements are reliable. Let's put this into a realistic example. Imagine a company, ABC Corp., that sells electronics. During an audit, the auditor needs to verify sales revenue. They gather audit evidence by reviewing sales invoices, checking bank statements, and observing the sales process. To make this efficient, the auditor uses sampling, selecting a few transactions from a larger batch to test. If the internal controls at ABC Corp are robust, like having a reliable inventory management system, the auditor can feel more confident in the accuracy of the financial statements, potentially reducing the amount of evidence required. In summary, audit evidence, sampling, and internal control evaluation are interconnected concepts that play a vital role in the auditing process. By understanding how to gather and evaluate evidence, effectively sample data, and assess internal controls, you'll be better equipped to navigate the complexities of auditing. Remember, the goal is to ensure that financial statements are accurate and trustworthy, providing a solid foundation for decision-making. As you continue your journey in accounting and auditing, keep these concepts in mind. They are not just theoretical, they are practical tools that will serve you well in your career. Embrace them, and you'll be one step closer to becoming a proficient auditor.